Happy Monday, Anthony Special here with Special Analysis for another edition of Uncut and on the Edge of the Market. Today we're going to jump in and look at our major market weekly overview. Why do we do this? Well, we simply take the time so that you have the opportunity as the week progresses to have an idea of where valuable turning points may be or valuable areas of support and resistance may be. Those of you who are shorter term traders, this is invaluable. Those of you who are swing trading are obviously need to be well aware of it as well. And those of you who are position trading, should really be taking this into account for the big picture. So it doesn't matter which way, what your particular style of trading is, or whatever your approach may be. This is valuable for each and every trader. So we're going to jump in. We're going to start off a little different this week than others. We're going to do a high level overview on the S&P 500. So what I did, and you can screenshot at this if you desire to, was I kind of not only did I draw it out, but I also typed it out, meaning I interpreted it for you guys as well. So basically what this says, to cover what this kind of means, although this may look intimidating, it simply says that the 41.97 level can absorb annual selling pressures, above which 47.62 January high structure remains in reach over the next several months. New highs are attainable into Q3, Q4, meaning later portion of this year. In the more immediate vicinity, closing above 46.20 should yield 47.62 within the next 3 to 5 weeks or so, where the market could place a double top on a monthly basis. So we're going to see how that transpires to the upside. Now to the downside, a daily settlement below 44.70 could signal 43.50 within the week or so. Able to contain selling through April and the point to settle below before clearly indicating 41.97 within several more weeks. Longer term support able to contain annual selling pressures and what would be a significant downside continuation point for Q3. So I realize the chart's a little bit messy, but I included all the channels and channel extensions so that we could deliver this to you. For what I did in this instance was actually do the actual interpretation. So guys, the concept becomes looking at a chart, marking it up, and then processing that into usable information, and that's what this usable information looks like. So I want to share that with you so you kind of have a little bit of insight to what I'm looking at. Just zooming in on the chart itself, as long as we continue to close below this structure, we have certainly a lot of downside here to go. I'd like to see it close above this structure here, above this teal line, before we go higher. So get that close, that weekly settlement above 46.20, that ascending channel right there, is what sends us up and onward to the, towards the next stop. So we need to really get that push up from here. So is this an impulse followed by a correction followed by an impulse? Possibly. We don't know yet. Or on a macro view on a weekly chart, is this an impulse followed by a correction followed by an impulse down further? We don't know that yet. Both of those are yet to be seen, but we're going to be watching them. And basically, that's determined by how price reacts to this point. If this if this starts to trend higher, then I know we're out of the woods. If this does turn lower, then on the big picture, again, this is an impulse followed by a correction, followed by what could be a lower impulse. And if that's what happens, then look out below. We definitely, we could have much lower to go. This was not the only bit of the correction then, meaning that there is more to come. We don't know. We are going to strategically play it. We will let the chart send us in the right direction. And when those opportunities come along, we'll take advantage of them. Dow Jones, you can see we're sitting here in a cluster of resistance. Really need to break above this blue channel here. 35.115, get a breakout above there. We could retest new highs. That's what we need to go higher. We have to break out of this cluster here. Of support of resistance. We got a couple channels of resistance that we're fighting. We got to clear them. If we clear them, there's this huge area that price could run up. And that's where we get our opportunity to make a whole bunch of money. NASDAQ has failed at this blue channel, center line here. Could likely test support down in this area here. Really no safe place to put a stop that you have a greater reward than risk. So I wouldn't recommend necessarily shorting it at this point. I don't think that the risk reward makes sense. But as long as we continue to close below this black channel, these support areas are in place here, and we have a juncture, coming up in the next week or so. So we'll see what happens with the NASDAQ, but we are prepared to potentially see the NASDAQ go lower from where we currently stand. Russell 2000 popped, failed, has broken below both the black and the teal lines here. I placed this as support, but it may very well be resistance. We're going to wait and see a little bit. If I zoom out, I mean, we could easily fall down here to 1780-ish, in the next coming weeks or so. So if this does continue to fall off, that's a possibility. We had this little sideways notion going on here, but this is not a great sign for the Russell. So this could definitely go lower. Taking a look at gold, we're still working the same channel we've been working for a while. If you zoom in on this, and I move this to a daily chart, what I did is I built this wedge, and what this wedge indicates is where price action eventually tightens and tightens and tightens, and it has to break to one side or the other. And as of Friday, it broke to the upside. So what does that tell me? For those shorter term traders, those of you who are intraday or very short term swing traders, this could potentially be a good buy signal. This could get us, up into this 1970 area fairly quickly in the next day or two. So if we do get a sell-off in the broader markets, gold typically trades inverse, and this could work out relatively quickly. I'm talking about a couple days. This could go from where we are, 1945, to about 1970. So I would not be surprised. When these wedges break out, typically there is some follow-through. Doesn't necessarily mean it's trend changing, but it is typical to have some kind of follow-through. So I exaggerated this here just so everyone could see it. Here's the pop, and we'll see if this follows through. But if it does, I would not be surprised at all. Crude oil, this disaster has been around the whole Ukraine-Russian situation. Still a big absorption period between what's going on overseas and what's happening, here in the way of releasing some strategic oil reserves. Don't necessarily know that that's the right thing to do, but that's not, that's above my pay grade. So the thought process becomes we are still watching it. If we do continue to break down here and we start to trend lower, oil could sell off towards the mid $70 area relatively quickly. I know everyone's, programmed to think that it's going above and beyond and crazy and wild, but don't be so sure about that. I haven't counted that out yet, so we'll see. I haven't, we haven't put on a trade yet in the sense of short or long. I'd like to see some confirmation, but don't be terribly surprised if we see prices go lower in the near term as opposed to higher. I'm not saying we can't go higher in the big picture, but I wouldn't be surprised if we go lower in the near term. Bitcoin, US dollar. We have failed at this area of resistance. Price is basically rolling over. We have support way down here, about 36,650-ish. But we have not, we've yet to given us a valid buy signal to take this long. Even if we did, we have a channel extension to contend with. But the reality again becomes we haven't gotten there yet. So we're going to sit tight, wait on this. There's not, the likeliness is that as long as we continue to close below this middle orange line, that we will at some point potentially test support before we test resistance again, unless something changes. So we'll see what happens with that. Dollar index trading fairly well. Hovered around the center line for a while, broke, looks like it's starting to trend, pulled back a little bit. Got support in the middle, resistance on top, definitely more support down towards the bottom. You can see every time that it has keyed this area that it has really reacted fairly well. So that is, all winning things. A couple other things we looked at last week. Google rolled over with the tech sector. It did hit our stop. That is what it is. Owning your losses is part of being a successful trader. So keeping that in perspective, it is what it is. We had a confirmation. It failed. It rolled over. And that's the end of it. It is, that's what happened. So here nor there, we did take a short on Netflix. And it's been working thus far. So we need to adjust our target here to this week. Just going to come into this area right here. And we need to add a 1% buffer. So we come to our line. I'm just doing this with you guys so you kind of get a feel for what this looks like. And I'm looking for 1% right there. So we'll call it 351.50. 351.50. 50 is going to be our target, for Monday. We'll see if this works out for us. But if there's continued downward pressure in the Nasdaq and the tech sector, this should work out well for us. So this was our sell signal. This is where we got filled. This is where we currently stand. So we're looking to go lower. Valero, another stock we're watching, has been trending fairly well. This was our buy area. We're up currently about 5.5%. We got a little ways to go before we get to our target. But as long as this doesn't roll over on us, thus far it's looked pretty good. This area of once resistance is now support, seems to be holding pretty well. So we'll again do some adjustments here on our target. This is going to be for Monday. I want to make sure we have a 1% buffer. So we come to the line, drop it down 1% right there. So that's 112. We'll call it 112. That's our target. That's what we're looking for. So that's where we bought it. This is where we want to get out of it. We'll see what happens. Again, we're keeping an eye on it. We're monitoring it as it continues to move along. So that is our high level of the S&P 500. That is our major markets that we typically look at week to week, and a handful of stocks that we have been watching. So we had a bunch last week. A couple worked out for us. A couple did not work out for us. I covered that on Friday on our progress report. But what we're watching still is Valero. Google did get stopped out, and we're looking at Netflix for a short. So we're going to see what transpires over the next couple days. This week should be interesting as always. A lot of volatility in the market, which makes things exciting. And that's about it, guys. We're going to get into it during the week. If you have questions, comments, concerns, feel free to email me, info@specialanalysis.com. Visit me at anthonyspecial.com. You can shoot a message in the chat on the website. Whatever I can do to help answer some questions and get you through the week and whatever you're looking at, I would be more than happy to to have a conversation with you, or highlight any of the stock tickers that you may be looking at. If you like this video, if you enjoyed, if you're finding value in what I'm putting together, please below, like, subscribe, share with your friends on social media. I do this completely for free, so the more people that I could share it with, the happier I am. And if you'd like to look at paid services that we offer at Traders Agency between myself and my colleagues, I invite you to visit us at tradersagency.com. We have a slew of products that extend from trading to, portfolio investing, whatever your pleasure. So with that, again, I wish you a beautiful and blessed week, a profitable week. It is the week of Easter, and I will talk to you tomorrow.